market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the UK Chancellor Rachel Reeves due to deliver her second budget in the House of Commons later today. Now, the much-anticipated budget will need to placate both MPs who've put the Prime Minister, Keir Starmer, on notice and the gilt holders who've been demanding a premium on UK debt.
Obviously, more headroom would be good, but there's always trade-offs because, of course, to build more headroom, you would have to increase taxes further or cut spending further. But we'll continue to manage that balancing act.
Well, for bond traders, a key focus will, of course, be how much of a fiscal buffer Reeves creates. Let's bring in our Lizzie Burden, who's outside, of course, the House of Parliament in Westminster. How much, Lizzie, of a bind is Chancellor Rachel Reeves in?
A massive one, Francine, and you framed it perfectly. She's caught between the bond vigilantes on the one hand and the left wing of her party on the other. This is the biggest test of Rachel Reeves's political career, and we've had months of speculation, weeks of leaks leading up to this moment. I was just speaking to the chair of the Treasury Select Committee saying that she's concerned about all the leaks that have been happening and the speculation as well. But the big question, as you say, is how much headroom is the Chancellor going to be able to leave against her fiscal rules? £15 billion is the amount that is expected, but the market would like to see more than that. That's barely any more than the £9.9 billion she left the last couple of times, and we know just how much uncertainty that allowed in markets about what tax rises would be coming at the next fiscal event. But this is a difficult moment for Rachel Reeves. We shall see which levers she pulls in this budget, because at first it seemed like it was going to be a manifesto-breaking income tax rise. Now officials have been laying the pitch for a smorgasbord of tax rises.
So Lizzie, if you break it down, what individual measures could we be expecting?
Well, the biggest one on the tax-raising side, Francine, looks to be a freeze of personal tax thresholds, so a stealth tax rise. She could also levy a mansion tax on homes worth over £2 million. That would be a political appeal to the left wing of her party, but it's not expected to raise as much as hoped. And then on the spending cuts side, we'll have to see how far the Chancellor is willing to go, how much she'll actually leave it to tax rises to raise revenue. We are perhaps expecting her to lift the two-child cap on benefits, which would cost £3 billion. And we know already that the left of her party have stood in the way of many of the welfare reforms that she would like to make. If she is to backload spending cuts to the end of the decade, that could raise credibility concerns about debt sustainability. So, as you say, we really are focused on the market reaction, as ever, after this budget. We're not likely to see the full extent of it the moment the Chancellor sits down after her speech at the dispatch box. But we've seen so much volatility in the pound-euro trade heading up to this moment. We've seen traders piling into bets that the pound will be weaker against the dollar. If the Chancellor manages to balance the books here, you could see a relief rally for sterling. But as ever, we are watching for the bond vigilantes, and the spectre of Liz Truss hangs over Rachel Reeves.
Lizzie, thank you so much. Lizzie Burden there from Westminster. Now, for more on the budget, we're joined by Michael Strobaek, a Global Chief Investment Officer at Lombard Odier, and Phil Aldrich, Bloomberg's UK economy reporter. So thank you both for joining us. Phil, finally, November 26th, we're here because there has been so much news. And I wonder whether, first, how do you think she gets this right? Is there really a balancing where she kind of pleases enough people that it's not a disaster zone? And because of the various leaks or the various news that we've broken, is enough damage already been done?
Yeah, so I think 15 billion headroom, as Lizzie was saying, is kind of the bare minimum. I think she's going to have to, if she really wants to resolve some of the concerns in markets, something like 20 billion will show that there's a willingness in government to actually take a bit of pain. There's also concern that too much of this will be backloaded, so there'll be too much of the threshold freezes in 28, 29, and not enough on spending. We're going to see 10 billion increase in welfare probably favourably compared with March because of the U-turns that were done. Of course, they were costed in the March spring statement, plus the $3 billion child benefit cap. So there's, which is being is going to be lifted. But there are a bunch of measures which are quite important for markets to believe that this is going to be a credible event.
Yeah, I mean, the concern, Michael, is that the government, the markets want one thing, and then the Labour Party may want another. So we'll get to that in a second. But what do you want to see in the budget? Like, are you invested in the UK?
Yeah, sure. We're actually overweight UK gilts.
Wow.
Because we think rates are going to come down here.
Okay.
It's very clear the market wants to see a package that doesn't hurt growth too much, doesn't knock too heavily on inflation, and establishes fiscal consolidation and stability. I mean, the single biggest challenge that the UK has is it is on a very tight path to being questioned by the market about its fiscal sustainability. And the Labour Party, of course, is in this situation with its voter base actually to act as if they have to be much more strong and conservative, and that's not easy.
But, Michael, I mean, like butter, everything is better with a bit of growth. How does the UK grow?
Well, first of all, we need the fiscal situation to be stable so that innovation, capital stays in the country, right? UK has gone through, you and I have been discussing this for 10 years, one situation after the other, starting with Brexit, come with Russians leaving London, come with res non dom and people leaving the country, and now many are questioning, is this a place for us to stay and invest? Can we trust the tax regime so that we can look forward? And with that, the UK has many strengths, but right now it's sort of going through a tunnel with a lot of fog, and hopefully the light at the end of the tunnel is not another train, but the end of it.
Yeah, let's hope. The concern, again, I mean, do you worry about inflation, Phil, which this could, it could put it up? Well, or do you actually worry about just wealth leaving and therefore lack of investment for the country?
There is a concern about inflation. Obviously, the Chancellor is expected to gerrymander prices down today by taking some of the levies that are on energy bills off those bills. She's already frozen prescription charges and rail fares, and these things will just automatically lower the rate of inflation. So that will help release the bank to cut rates. The bigger concern is the longer-term picture. Is this going to be fiscally stimulative, actually? We've got a lot of, the minimum wage increases were quite substantial, particularly among the 18 to 20-year-olds, who had an 8.5% increase in the minimum wage. Are these pressures going to counteract the short-term efforts to dampen the headline rate of inflation so that we can actually see some prospect of long-term inflation coming down? So that is a measure that I think is important. The other thing on growth is that obviously the headline growth rate is going to be lower this time for all 5 years coming because of the OBR downgrade. Now, in a way, that should be sort of set aside, because the judgment that we need to worry about with the OBR is whether her measures that she takes in the budget will be growth stimulative or growth negative. Now, because they're going to be 20 billion or so of tax rises, you would automatically expect them to be growth negative. But the other elements in the budget may make it growth neutral. There's no way overall that she's going to be growth positive in this budget, but growth neutral is probably about the best she could probably hope for from a judgment from the OBR.
And the gilt market would be fine with that.
Yeah, I mean, the key thing is that we get interest rates down in this process as well in this country, which we think we will see. That's why we overweight and like gilts. And the Bank of England needs room to maneuver if this knocks or doesn't really sort of keep inflation sort of stable or coming down, and growth is not coming through. You're in a catch-22, and the Bank of England will have to sit tight. We don't think they will. We think they will materially lower or have to lower interest rates, and that makes bonds or gilts attractive.
And Michael, is this also relative to other countries?
Yes, this is, on a global basis, UK gilts are actually quite attractive from a yield perspective.
Because the others are a mess?
They're lower.
That's my technical CFA level 6.
They're lower, that's for sure. I mean, we're in a low interest rate environment again, maybe not so much in the US, but certainly in Europe. Switzerland, we're at 0. In the Eurozone, they've been coming down for 2 years and so. And therefore, UK gilts are still quite attractive, but it doesn't reflect the picture of course, the sort of difficult situation the UK is in right now.
that's the big reward that Rachel Reeves could get from this budget. If there is a belief that inflation is coming down, if they have been credible with their fiscal parameters, they could get an extra $5 billion or so from just lower borrowing costs as the market, as rates come down, as the bank starts cutting it, and this kind of slim premium on gilts just disappears. So there's a positive reward if she gets the package right. I mean, as you were talking about, she needs to bring her politicians, her sort of the left wing of the party on side, and it's that tension. How has she been able to do that? That'll be interesting. Because
Phil, her job is at risk, and also the one of the Prime Minister. Right? Are we overestimating or underestimating this danger?
I don't think we're overestimating the danger. I mean, it's been chaotic for the last year, we've got May elections where Labour is expected to suffer badly, there isn't. As much as the Chancellor does talk about, we have established economic stability, there hasn't been economic stability, and we don't have the growth plan as it's delivered by government is to invest, is capital investment, public state spending on capital projects is the core to the growth plan, and then they're hoping to crowd in private sector money with that. But beyond that, doesn't seem to be a vision for the country or strategy for which people can get behind. So just getting the markets on side, releasing an extra $5 to $10 billion of headroom because of lower borrowing costs, that would help. That would be definitely a positive thing.
I mean, you could have, look, we're not going to go to elections because of the fixed-term parliament, but you could see a new Prime Minister if you believe some of the rumours from Westminster. Does that make a difference from an investment point of view?
No, I don't think so. I think the plan is what matters.
Right.
Less than the personalities right here now. It's the plan and the credibility about a solid plan.
Michael, I mean, the markets, one day they're happy about AI valuations, the other they think it's like the end of the world. And then in this mix, you also have a lot more talk about a Fed cut because of the potential replacement for Jay Powell.
Yeah.
Like, what happens to AI valuations?
Well, they're going up. We're moving into a sort of bubbly territory. But the good thing about bubbles is they create handsome returns, at least when they sort of blow up or start getting bigger.
Until a point.
Until a point, and that's the point where you, of course, want to run.
But how do you call that point?
That is incredibly hard, but it will probably start with a miss of expectations and sort of the feel, we actually went too far looking into the abyss now. There's a lot of optimism, but it's solid. It's not TMT and dot-com bubble all over again, in our view. It is productivity anchored, new instrument, artificial intelligence, Gen AI, etc., is here to stay. It has enormous money backing from the big tech companies that are loading up, the hyperscalers, everybody is rushing into the space in a situation where the geopolitics actually drive it, because everybody wants to lead the AI arms race, if you will. So it has an enormous backing of investments, and therefore this can go on for quite a while until then the music stops. But certainly the music is playing.
Yeah, it certainly is for now. You're expecting a Fed cut in December.
Yes.
Again, it could be, the cycle with the high AI valuations and into, a cut, but still quite elevated interest rates could be tricky overall for the markets.
Yeah. I mean, we've expected 3 cuts and this year, and we think we're going to get the December one, and then they'll have to pause. And take stock of the labor market, take stock of inflation, take stock of the damage, honestly, the tariffs are doing, because there's nothing good about those. And then the Fed will probably wait all the way into mid-next year to do anything.
Okay, what a day. Thank you both for joining us. Michael Strobaek, Global Chief Investment Officer at Lombard Odier, and Phil Aldrich, Bloomberg's UK economy reporter. Now, coming up, how private credit is reshaping wealth portfolios. We'll discuss that with Hugh Van Steenis from Oliver Wyman. We'll also get his views on the UK budget. That's next, and this is Bloomberg.
Today, Chancellor of the Exchequer Rachel Reeves delivers the UK's autumn budget. Can she boost growth and productivity by unlocking investment? How will the Treasury raise revenue without breaking tax promises? And will the budget prove that a fairer economy can reward working people? Bloomberg Television brings you special coverage starting with the Chancellor's statement to Parliament at 12:30 p.m. UK time. And tune in Thursday for the opening trade budget special at 7 a.m. Bloomberg. Context changes everything.
When I speak to my customers, they say, you know, we've had Brexit, we've had COVID, we've had the cost of living. They've built the resilience into their businesses.
The UK historically has had a great reputation for stability. At least you've known what you were dealing with. Even if you didn't like it, you knew what you were dealing with, and we tend to, you know, create this stable environment.
Well, I hope there's some consistency in the budget. The government have been very pro-aviation and pro-growth. They really recognise the valuable role that aviation plays, especially to an island economy.
We're the largest airline in the UK. We'll switch about 10% of our capacity, about 5 million seats, out of the UK into those countries, Sweden, Italy, reward those countries who are abolishing environmental taxes.
The average small business we support, they're about 10 employees. The person who's running that business is doing the sales, the marketing, the finance. They want that certainty to enable them to continue to run their business.
There is a lot of capital. To deploy capital, you need to be confident that you can invest something and the rules aren't going to change.
Even a dumb Labour government will work out that for an island on the periphery of Europe, the way to grow and the way to increase tax revenue is to get tourists onto the island first.
Well, business leaders are weighing recently on what they want to see from the UK budget a little bit later. Now, for a different take on the budget, check out Maren Talks Money podcast. Bloomberg UK Wealth's editor-at-large, Maren Somerset Webb, gives her take on your money and the world of investments every week. Now, let's also talk a little bit more about the budget with Hugh Van Steenis, partner and vice chair of Oliver Wyman. So good to speak to you, Hugh. I mean, if you look at private market, I mean, first of all, what are you expecting from the budget overall? I know that a lot of the focus, and you've been focused on private credit and how it changes wealth portfolios, but what kind of role does private credit and private markets in general have in the UK?
Oh, thanks for having me on, Francine. So I think the key role for private markets here will be to try and fund the increasing spend on infrastructure. Yeah. So if I think about the digital infrastructure, the energy infrastructure, quite frankly, the utilities which need money, the more the government is hamstrung by borrowing, the more it will need to turn to the private sector. And so I think the development, and part of private credit, the story is really about evolution, is how it's moving from being just mid-market, small company lending and acquisition finance to actually investment grade. And I think that's the area where the budget matters most for them.
I mean, do you worry about private credit in general because of I mean, we've had, you know, the two blowouts in the US. There was a couple of days, Jim Dimon talked about cockroaches. I know he's then recently, walked back those comments. But if it goes ugly, where does it go ugly first?
Look, I think this is a great question. I've just spent also 2 weeks in North America. I think we need to reframe this as really a discussion about credit rather than just private credit. You know, you've spoken a lot about the K-shaped economy. Yeah. There are clearly some people who are suffering from stubborn inflation, from the changes. And if you think about the companies which are starting to go bust or need restructuring, actually a lot of them are more impacted by the K-shaped economy. Some clearly are in private credit, some are not. So I think one is it's really about credit overall. And there's some behaviour which looks a little bit late cycle. You know, underwriting standards have fallen a bit. And I think
the underwriting standards, that's the biggest concern, isn't it?
I think that's one concern. There's just a lot of money being put to work here. And the more that the M&A market was weak, the more that people turned to other sectors. So there's been a bit of a chase for growth. But I think the second thing, Francine, is that we've always seen, in most sectors, there's differentiation. What's been bizarre about private credit is actually the leaders and the difference between a first quartile and fourth quartile has been unbelievably tight. And I think what we're now starting to see is a bit of a shakeout, like, did you actually make good decisions? Did you size your bets correctly? I mean, some of the surprises here are actually, quite often when you find is when you make a mistake, you go back and say, was it a new mistake or was it an old mistake in a new format? One or two of these managers had 35% of their fund on a single credit. Well, that's not very prudent investing.
So what does that mean? How much does diversification actually change the risk in your portfolios, and how much of it is just because you can't really value it properly because it's private?
Oh, I think so. The larger private credit becomes, the more that the standards will evolve. So right. You can already see there's an interesting announcement by MSCI that they've now can do NAVs on 18,000 funds. You can see that there's certainly some a progression in terms of more invigilation of what's going on. No, look, I think that the challenge here is now it's almost a $3 trillion asset class. There's going to be the good, bad and the ugly. There's just no way when you're making $3 trillion of decisions. And the key point in investing is not that you don't make mistakes, it's when you make a mistake, it doesn't hit your portfolio too much. And I think what we're starting to see here is a story of even like the leaders and the tail. No. And actually, the tail has started to become a bit straggly.
Hugh, a lot of the big companies will try and package it up also for retail investors. Yeah. I mean, if you look at some of the pitfalls, is that you don't really know what's in it. Again, you don't have regulation, but then at the same time, it means that they could take advantage of an asset class that will just keep on growing. What are the pros and cons, and where do you think the UK falls?
So I think first of all, I think there is regulation. I think that obviously, in terms of if you sell a product to true retail, the SEC will have to oversee it, and so there will be invigilation. So at the moment, something like about 12% of private credit is sold to the wealthy. Yeah. Let's be honest, it's to the extraordinarily wealthy for the moment, and they've got caveat emptor, but obviously they want standards. But that is broadening. This year, something like 16% of inflows have come from the wealthy, and it's broadening out. And you've seen a flurry of new products looking to try and access wealth mandates. I think as you broaden it out, I think one of the themes for me is there is a blurring of lines between public and private credit. Now, we've spoken about this in the past. I think for an insurer, it's definitively happening. You know, you're now saying, I just want to think very smartly about where I put my bets on the credit curve. I think that's starting to leak its way into the retail market too, but it's mostly a high net worth issue, and that's still an area where there's reasonable oversight. So I think this isn't a Wild West. This is very much one where there's some experimentation, and like with all experimentation, not every experiment will work.
You speak to clients every day. Are you expecting a resurgence actually in M&A? How do the animal spirits feel out there?
Oh, it's fascinating. So I just think that we're almost in Christmas, and we're sold out into Christmas. There's a lot of work being around. What if I do this? What if I do that? And what's fascinating is it's both strategics who are looking to do, think through big M&A. There's obviously a discussion in the US around, is the next year the year to go for before the midterms? Is there a real window of opportunity? And certainly in finance, almost one of the surprises is that we haven't seen more mid-cap US bank M&A. That's an area which I think is going to be very interesting.
Do you think that's coming?
Look, you never say never. One never knows, but I think my bet would be that it's more likely than not.
Right. In Europe, how does it feel in the UK?
Yeah, so the UK's like as you've been discussing all morning, I think the budget has definitely put an extra risk factor on the UK.
What held back investments?
Yeah, held bath investments. So I think what we're seeing is there have been a series of deals. Look. Just go back to private credit. We've seen two North American players buy insurers. So there has been M&A, but it's just that stubborn mix of low growth and high tax has created a slightly extra risk premium. You see that in gilts, you see that in investor behaviour. Look, I was with one CEO yesterday who was hoping that we may have seen peak pessimism on the UK. Let's see after this afternoon.
Hugh, thank you so much. As good as ever. Hugh Van Steenis, Oliver Wyman, Vice Chairman. Coming up, we'll be discussing Vanguard's investment approach ahead of the UK budget with their chief European economist. That's coming up next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The wait is over. The UK Chancellor, Rachel Reeves, set to announce her budget this lunchtime. She faces the delicate balancing act of placating both the gilt market and her Labour Party. In the U.S., Kevin Hassett emerges as the favorite to become the next Fed chair, his views seen as aligning with President Trump's rate-cutting agenda. Plus, Russia confirms that U.S. Special Envoy Steve Witkoff will visit Moscow next week as President Trump hails tremendous progress towards peace in Ukraine. So Bloomberg has learned that White House National Economic Council Director Kevin Hassett is being seen as a front-runner to be the next Fed chair. Now that's as the search for Jay Powell's successor heads into its final weeks. Well, Hassett spoke to Fox News channel Hannity about this.
If he were to ask me to be Fed chair, then of course I would have to say yes, because I want to serve my country and I want to serve my president. But we'll see how it goes. There are a lot of great candidates.
Now, for more, our managing editor, Jill Deesis, joins us now from Hong Kong. Jill, so how aligned, good morning, first of all, or good afternoon, how aligned is Hassett with Trump?
Well, Francine, I'd say he's very aligned. I think, in addition to that interview we were just quoting on Fox News, Kevin Hassett has appeared on television several times implying that he would be more in favor of more aggressively cutting interest rates. He actually just had an appearance on Fox not too long ago where he was talking about how he would be, if he was chair of the Fed, he would be cutting rates right now based on the data available to him. Francine, we know that over the course of the last year and beyond, Trump has obviously been enormously frustrated with Jerome Powell. Remember his own pick for the Fed chair position back during his first term in office. And he's been really, really upset about the pace at which the Fed is cutting rates, cutting twice this year, but holding prior to that. So it does seem like if the choice ends up being Kevin Hassett, which, remember, nothing's really official in Trump world until it's actually official. So we'll see if this ends up being the pick. But if it is Kevin Hassett, I think, Trump would ultimately find somebody that he probably perceives as being a much stronger ally, actually, as the chairman of the Federal Reserve.
Jill, thank you so much. Jill Deesis there with the very latest, of course, on Kevin Hassett. Now, with just 3 hours until the UK budget, the chair of the House of Commons Treasury Committee spoke to Bloomberg about the UK budget a short while ago.
There's always a challenge when you're looking at lots of different taxes, but we looked at at gambling, and we felt that as a committee cross-party that certain forms of online gaming, which cause a lot more harm, are not taxed as highly as other things like horse racing and going into a casino where it's less harmful. So we thought there should be an opportunity to raise taxes there. We also looked at cash ISAs and we looked at child poverty. We've looked at a number of the issues that were being discussed around the budget.
Well, also plenty of attention on the UK bond market. Today, fund managers at Amundi, Ned Group Investments and Vanguard have already trimmed their exposure to gilts. Well, Jumana Saleheen, Chief European Economist at Vanguard, now joins us. Thank you, Jumana, for being with us on what is probably one of the most awaited. I mean, it just feels like a long time we've been talking about this UK budget. What exactly rides on it? Are the markets nervous?
So it's definitely, I would describe it as it is a significant fiscal event. Yeah. Will be watching. We're looking for that headroom to be increased from the 10 billion that we've seen in recent years to something more like 15. And there's obviously a shortfall of 20 to 30 billion. How are we going to fill that? Our estimate is mainly it's going to be tax rises, the thresholds being extended a further 2 years, and smaller spending cuts. But overall, that's the minimum that markets are going to be looking for. But the real point, Francine, is the delivery of the budget by the Chancellor. It has to be good. There has to be good follow-through. So markets will be watching not just today, but also in the coming days to see that broad political backing.
Yeah, who do you think the Chancellor is going to speak to? Because she needs to, again, within her own party, they're not one on the same, hymn sheet. There could be a challenge also to her Prime Minister, to the Prime Minister, and there's been talk about her losing her job. So she has to keep that faction, especially on the left, happy. But she also had to keep you guys, the gilt investors happy.
Yeah, so she's actually got a number of different audiences, and she'll have to communicate effectively with them. She's got to convince markets, the bond market, that she's, dedicated to her fiscal rules, which she has been. I think the mix of the tax cuts and the spending cuts that she does today, whatever she announces, people will also be watching that. So in terms of markets, is she going to have some front-loaded? Is it all going to be back-loaded? What is the mix? What is the sustainability? That's the bond market. You're absolutely right. She's got other people she's got to convince. Her own party. She's also got the public, and she's got businesses as well. So 4 different audiences.
I know we don't know exactly what's in the budget, but given what has been leaked or what we've heard so far, what do you think the impact will be on inflation and growth for next year?
So on inflation and growth, we are seeing a fiscal drag. In other words, because there will be rises in taxes, we expect that to be negative for 2026 by about 0.2, shaving off growth. But there could be also some positives in terms of inflation with respect to if she does do some measures to cut the tax that you pay on your energy bills. We know in the UK the inflation is high. 70% of that is actually due to these regulated prices such as energy and water. So if she can tackle some of that, there could be some positive news on inflation, which would allow the Bank of England to cut potentially earlier and give rise to that positive fiscal environment, that virtuous circle.
Do you think the Bank of England cuts in December, or is it too soon?
It may be too soon. Our base case view is that we're expecting a couple more cuts, but next year. Yeah. But obviously that could be brought forward depending on, what happens to the economy and what we see today.
Jumana, I mean, how does the UK compare to other countries around the world, right? Because it's always something of relative value.
Yeah, that's absolutely right. So I think in terms of, if you're talking in terms of markets, we're seeing in terms of the gilt market on the 10-year and the 30-year, there is a risk premium that's priced in with the UK bond yields at the 10 and 30-year above the US. So at the long end of the curve at the 30-year, there's a 60 basis, 70 basis point spread. That term premium, if this budget goes well, if the further sort of sentiment about fiscal stability goes well, there is actually quite a lot of room for that spread to narrow. So there's a lot of potential when you say relative to other economies for the UK to do better. The gilt yield is high.
Jumana, how does this country grow? So not 2026, but 2027 and beyond.
Yes, so absolutely. So, the growth reforms, how do we see productivity rising? That's one of the big challenges, and that's one of the things that we're looking at today from the OBR, is that we actually expect them to be downgrading their long-term growth forecast from what was quite optimistic at 1.8 to something more like 1.5, which is also a little bit higher than what we at Vanguard expect that trend growth rate to be. So in order to get the economy to grow, Francine, it's the classic things. It's investment in the economy, whether that's public investment, private investment, incentivizing that investment. And, we know in the US they're seeing a lot of investment in AI, in technology, but also technological adoption. That's really important as well. If you can't innovate, can you actually take that technology, use it really well, and innovate on the back of that? So there's two forms of that. At the moment, we haven't seen that yet, but that is obviously productivity growth. What drives that? It's people, it's technology, and how the two are used together.
Jumana, I mean, anecdotally, there are a lot of, I guess, maybe wealthy foreigners that have either gone back to where they were from or actually just moved to, tax havens, even like Milan. I mean, does that make a difference to investment in the country, or is it just at a moment where people are a little bit unhappy if you've been here 15 years and feel like it's time to go?
So I think when the numbers have actually been looked at properly, as my understanding is it's not actually big numbers, so it's actually small beer. I mean, in the long run, people are looking at other things about their earnings potential in the UK is probably higher as well.
I mean, there are some other, things that have been discussed, for example, stamp duty on equity buys and things like that. Does that change the nature of the financial markets in the UK? So I think she goes through with it?
I mean, obviously, there's quite a lot of potential to think about property tax and how that's something that's very politically charged. But there are a lot of, great analysis out there on how improving property taxation and making it more fair could lead to improvements in the economy, could also lead to that productivity gain that we've been talking about as well. If you see sort of infrastructure, connecting the cities, making Britain more equal across the piece, that could also be good news.
Jumana, thank you so much. Jumana Saleheen there, Chief European Economist and Europe Head of Investment Strategy Group at Vanguard. Now, Bloomberg exclusively reporting that the U.S. presidential envoy, Steve Witkoff, advised Russia on how to pitch the Ukraine peace plan to President Trump, just days after Trump announced a peace deal in Gaza. In a phone call on October 14th, that lasted a little over 5 minutes, Witkoff spoke with Putin's top foreign policy aide, Yuri Ushakov, to suggest they work together on a similar plan for Ukraine and that Vladimir Putin should raise it with Donald Trump. His guidance, including suggestions on setting up a Trump-Putin call before Volodymyr Zelensky's White House visit later that week and using the Gaza agreement as a way in. Now, President Trump was asked about the Bloomberg reporting while speaking to reporters on Air Force One.
That's a standard thing, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. That's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
Well, Russia confirms U.S. envoy Steve Witkoff will travel to Moscow next week with several U.S. officials for talks to end the war in Ukraine. Well, let's bring in Bloomberg's Russia government editor Greg Sullivan. Greg, good morning. Where do negotiations stand right now, and what does the president, Donald Trump, hope comes out of these meetings with Russians and Ukrainians?
That's right. So, as you said, the Kremlin has just confirmed that Witkoff is expected to visit Moscow next week and will likely meet with President Putin. Trump dispatched him amid optimism and his latest push to try and secure a deal. Obviously, there were talks between the U.S. and Russians happening in Abu Dhabi recently. And Trump also said that he would dispatch Secretary of the Army Dan Driscoll to Ukraine to continue those negotiations. He's largely expressed optimism that the gap between the U.S. and Ukrainian positions has been narrowing. However, sticking points still remain, and it's hard to see how certain changes that could potentially satisfy Ukrainians wouldn't be a deal breaker for Russians, and vice versa. Nonetheless, the negotiations are ongoing. The Russians also confirmed that they have seen the plan but haven't had time to discuss it. Yesterday, we heard from the foreign minister that any deviation away from agreements reached in Anchorage, Alaska, also could dampen Russian enthusiasm for the deal. So there's still a lot up in the air, but clearly a flurry of diplomacy happening right now around all of this.
Okay, Greg, thanks so much. Bloomberg's Russia government editor Greg Sullivan on that diplomacy. And of course, we'll see in the next couple of days and weeks if we do have an agreement. Coming up, what can British businesses expect from today's budget? We'll be speaking with the Confederation of British Industry. That's next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Britain's most prominent business group has urged Chancellor Rachel Reeves not to put the country on a, quote, road to a certain decline. The head of the Confederation of British Industry says Reeves needs to make bold choices when she stands up in the House of Commons today. Well, Bloomberg's Lizzie Burden is in Westminster with the group's chief economist. Hi, Lizzie.
Hi, Francine. Yes, Louise Hellem joins me now in Westminster. We're outside the UK Parliament, where, of course, the Chancellor is going to be standing up at 12:30 and delivering her budget. Welcome, Louise. Thank you so much for making time. Francine was just referring to the comments from your boss, Ray Newton-Smith, that if Reeves only tinkers with tax rises, the UK will be on a road to near certain decline. I wonder, if we get this smorgasbord of tax rises that we've been told to expect, what will the hit to growth be?
So I think what we really wanted to see from the Chancellor was a budget that was focused on growth. So I think that did mean that she needs to make those big, bold decisions. I think, as you say, the expectation today is that we're going to have that kind of smorgasbord approach. And I think the danger there is that we continue to just be in this low growth cycle without tackling some of the fundamental issues we know we have in the UK.
But to be clear, would it have been better if she went for a big tax rise like income tax, or were you advocating spending cuts over tax rises?
So I think obviously nobody wants to see taxes rise, but we understand that there is a kind of a fiscal black hole at the moment, and that actually that property taxes did need to rise. But I think our message was, think about something that is broad-based, which would create less distortions, and that's where I think income tax probably is that better choice.
Right.
Otherwise, I think, we need to see what the Chancellor comes out today, but the issue with the smorgasbord approach is that we're hitting businesses here, we're hitting individuals here, and it just creates distortions and overcomplicates the tax system, and that again can be a further drag on growth.
And there's been so much speculation about what's going to be in this budget. How much has that in itself damaged business sentiment?
Yeah, I mean, we're here nearly at the end of November. Businesses and I think everybody has been waiting and kind of holding their breath over the last couple of months.
Of it we've been
I know, but that's it. We're here, in the cold, frosty morning. That it almost feels like it's getting into Christmas. So, businesses have been really holding their breath, waiting and pausing on investment decisions, and I think that means that we have had really weaker growth this this half of the year. So I think, hopefully after today, businesses will be able to exhale. I think that the big question, though, is will they feel confident enough to push that investment button?
They also want to know, of course, when and whether the Bank of England can cut rates. How inflationary, if at all, do you expect this budget to be? And will it derail the Bank of England's cutting path?
Well, I think, again, it really depends on what those measures are. One of the ones that we expect is to see that increase in the national living wage. I think, that will come on the back of several very large increases, lots of cost pressures on businesses in terms of employment, particularly on the back of the decision last year to increase national insurance contributions. And so the question there is, will businesses have to pass some of those costs on to higher prices? And if they do, then obviously that will have inflationary impacts.
Well, do you think that businesses will have to let employees go because they can't afford that new higher national minimum wage?
I mean, unfortunately, what we have seen is businesses really holding back, at least on backfilling. We have had some businesses who have reduced their workforce. At the moment, we're not seeing widespread kind of redundancies, but there is definitely a weakening in the labour market at the moment. And, all those decisions are making it harder. We've obviously got the Employment Rights Bill as well, which is looming large for businesses and creating additional risk, particularly if they take on some of those people who maybe are further from the labour market, who have been inactive for a while. And those are just the types of people that government want to see back into work as well.
Just going back to the spending cuts, as an economist, if those spending cuts are backloaded to the end of the decade, is that credible?
So I think whenever we talk about spending cuts, you need to understand where those are going to come and have a credible plan to deliver those. Obviously, in the past, when we've seen those being backloaded, there's been lots of questions as to whether they are credible. And I think whilst, like we say, today we expect to be largely focused on that tax side, we do need to see more efficiency in public spending, thinking about actually how we can increase productivity there. And that is one of those important elements if we are eventually going to bring the debt down in the UK.
Just in terms of the big picture here, I do wonder what the bar for success is. If Reeves can just survive today and at least partly please the gilt market, the left of her party, and not break the manifesto, is that enough for business that she should just survive and not have a change of leader?
So I think at the point that we're at now, I think whilst that might mean she will survive today, like I say, businesses can maybe have that sigh of relief. It's not going to get us to where we need to be in the longer term. We need to see some of those more positive policies, some of that more ambition for growth, and that's ultimately what we need to see.
Though, of course, part of the reason we suspect that there was this U-turn on income tax was because of all of the speculation around a leadership challenge, perhaps from Wes Streeting. He denied it, the Health Secretary, of course. Have you been looking at what an economy would look like under a Prime Minister Wes Streeting versus Prime Minister Keir Starmer?
That's not something that I've looked at. I mean, I think one of the dangers that we have here is that we go back into this kind of circus of the politics rather than actually, like I say, focusing on the fundamentals of what we need in the UK economy, and that is the stronger growth. And I think that, that would be the big danger if we went through that cycle again. We want to see the growth mission kind of succeed in the UK. That is ultimately how we're going to get higher living standards, and that is what we need to focus on for whoever wants to be in power come the election, to say that they are making a difference to people's lives in the UK and they're improving their wages and their livelihoods.
Because, of course, the argument from the Prime Minister has been if you have a change of leader, the markets won't wear it. Is that a weak argument?
Well, I think, again, it comes back to that danger of being sucked into the cycle of politics, and that provides that creates this kind of ongoing theme of uncertainty. And I think, this government came into power pledging that they would have more certainty, that there'd be a boring government, if we remember that. And actually, that's not where we are at the moment. So actually, we want to see long-term decisions that are credible, that gives businesses that certainty and predictability to invest. And that's ultimately what we want to see.
Indeed, it's been far from boring. Louise, great to talk to you. Thank you for your analysis. That's Louise Hellem, Chief Economist at the CBI, the voice of British business, of course. And Francine, we've had many, many months of speculation. We'll be finding out exactly what's in this budget at 12:30 p.m. London time.
Lizzie, thank you so much. Lizzie speaking there with the chief economist at the Confederation of British Industry. Now, Bloomberg MLIV strategist Ven Ram says the pound will remain under pressure regardless of the UK budget outcome. Well, Ven joins us now. Ven, always great to speak to you, especially on budget day that we've been waiting, I feel, for over 7 weeks. What are the broad brush implications on both gilts and pound?
Morning, Francine. It's an honor to be on your show, as always. I think that, the pound has had an interesting quarter. At the end of September, it was trading exactly at fair value, indicated on modeled terms. But since then, it is now trading at a discount of 2.6% to its fair value, meaning that investors have embedded a risk premium, significant risk premium, into the pound because of the fiscal lack of fiscal discipline in the UK. And I think that, with debt to GDP ratio already hovering around 95%, the markets expect Rachel Reeves to restore some fiscal credibility, and that's the big question for markets today. And even beyond then, there's the question of the unsettled question of where do we go on inflation in the UK. Because if you look at the UK's real effective exchange rate, it is at the highest since the Brexit referendum. So meaning that UK is getting uncompetitive for trade, and therefore that risk premium is also showing in the pound. So the pound faces a sticky wicket here, Francine.
Ven, what could that mean for the Bank of England and, of course, for the Governor, Andrew Bailey?
Well, a lot of it will come down to whether or not Chancellor Rachel Reeves is going to front-load the fiscal consolidation or not, and what, if any, will be the implications of the measures on inflation. We have already had the announcement that the minimum wage is going to go up by 4.1%. That has the power to not only stoke unemployment but also uncork further inflation. So we will see what measures she outlines on VAT and other inflationary measures. So depending on that, the markets are pricing in an 80% chance of a rate cut in December. I think that may be a bit too premature, but we'll see what measures she outlines. But, for gilts to rally from here, I think there needs to be a credible path of fiscal consolidation from Rachel Reeves today.
Yeah, and a couple of, the questions that you beautifully laid out is basically, are these tax hikes inflationary, and also are the tax hikes going to drag on growth? And what is a single, she's trying to do a lot for a lot of people, right? She's trying to keep the gilt market on side of, some of the most fractious, left-wing party people in the Labour Party on side. If there's one thing that she needs to get right today, what do you think that is?
I think the overarching theme will be the fiscal headroom. I think that if she outlines anything less than, say, 15 billion, I think that won't be credible for the markets, simply because she will have to come back again, perhaps in the spring budget, spring statement, and make some tweaks to fiscal plans, which is not what the market wants to hear. What the market wants to hear is a credible fiscal plan that puts the debt on a consolidation path for the UK.
Ven, as always, thank you so much. MLIV strategist Ven Ram. Now, the UK Chancellor Rachel Reeves will deliver her budget at 12:30 p.m. today in London. Of course, viewers in the UK and in Europe can join us for full coverage and analysis as it happens. Then the opening trade tomorrow will also break down the numbers with key business and political voices in the budget special tomorrow morning. Now, again, a lot of the outcome today will probably depend on this combination of the amount that Reeves's fiscal headroom, the front-loading nature of fiscal tightening, viability of revenue raises measures, but also how that's expecting to hit growth and inflation via OBR forecasts. This is a picture for AI. Don't forget AI. It's not only about the budget, but NVIDIA down 1.3%. Up next, Bloomberg Brief.